The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Monday edition, Monday the final day, March the 31st, final day of March for that candle in the monthly chart. And I've really been impressed at this market. How many it used to be a big spike to 75 points, and then maybe 95, then we'd touch 100 and maybe 115, and then we'd pull back, and by the end of the day it would be down sharply, kind of the pattern. And all of a sudden what we've seen is 140, 155, 170 point spikes to the upside many times this month. It's really something. Does it change the chart patterns? We'll go through all that. This is really the last day of the month, the first day of just about to start the first trading day of April. There's a chunk that we need to go through, but I first want to say thank you, Steve. Great 2 hours. Always great to have you start the day, kick off the day here at TFNN with a tremendous amount of information that you impart and techniques, and we do appreciate it. Of course, straight after me today will be Larry Pasavento. I'll be filling in for Larry. I believe he's not well, and I just got enough time to be able to do the show, and then I got to run. So it'll be my pleasure to be here 2 hours today. That's the other thing. Oh, and then, of course, you've got Daryl Martin, you've got Dave White, you've got great technicians, you've got Tom O'Brien wrapping it up at 4 o'clock till 6. I wanted to just quickly show this. I need to show it at the end of the day on Friday because obviously that would have been an appropriate time. I'm not very good at this, but I'm going to do my best here. I have a webinar coming, a live Master Trader Series Level 2 here in the Boston area. It's over at Babson Executive Conference Center, Wellesley, Mass. This coming Saturday, 8:30 to 4:30. 8 hours of intense review. It is also looking at some of the newer techniques, some techniques that for some of you will be absolutely fresh. Others have heard me initiate it, talk about it a little bit, but not really refined it. Now I've refined it, and the real test is going to be this month. It's a fantastic time to be looking at something like that. Who does it? What do you need to be able to take part of this level 2 of the Chapman Wave methodology? My preference is that you've already studied the CD Introducing the Chapman Wave Methodology as my CD book that has 470-something slides, but about 27 chapters. And I go through all these different techniques that I discuss all the time. The arch formation, the cup formation, how you can use the left side price measured move to go to the right to be able to come back in a one-to-one move from the top to the bottom or the bottom to the top. How you can use something that I call the inside wedge. It's a diagonal. I should have had it already, but I was really busy before the show. And I'll try to put it up during the break, and I'll explain what goes on there. And if you do not have the CD, but if you've taken one or two of my webinars, like the last webinar for subscribers, that you can take it as well, and you'll be able to subscribe to that. It is a webinar on the MACD, the moving average convergence divergence, and the slow stochastic. Really important. Two things about it is that it goes through a great number of details that I will cover once again when I do the Master Trader Series on Saturday, but there I don't have to spend as much time because I take it for granted that you've done it. So, so the prerequisite is that preferably you're using the Chapman Wave methodology in your practice trading or your trading. That's really important. And number two is that you've got not just a smattering, but you've got quite a deep knowledge of the counting the peaks, A, B, C, D, E, F, even G, on the way down the troughs, how I use these different indicators, how I emphasize on the downside is patterns and technical tools, not just the troughs. I'm going to be showing you something about troughs, how important quick moves to the downside are in assessing certain things. I'm going to be spending a lot of time on sector analysis because why? I want people to come out of this trader series just like they do my webinars. I want you to come out with the knowledge that the very next day you can put in a trade using the technique. That's really important. So it is a full day. It's here in the Boston area. There's great accommodation for those of you who have to sleep overnight. You just kind of walk downstairs and you're right there in the dining hall, which is real close to our room that we're going to be in. We're in a great room, and the meal, the lunch is just, their specialty is food. So the food will be a great thing for lunch and all through the day. Always emphasize that. For some of us, it's very important. So let's get back to the nitty-gritties. I'll put up the CD in a moment. I'll show you the different things we'll talk about from the CD. Let me run the numbers down, and let me just get out of that. Boom, gone. Let me get out of that because that's my little trading vehicle intraday. I like to do this. It's both for fun and to absolutely develop these techniques in real time. There we go. So the E-minis is testing that downtrend line, that falling X formation. That line is strong resistance. And I said today that for my subscribers to my opening call that I always show the E-minis, just exactly what you're looking at right now. Of course, the price is different because this was... Whoa. Excuse me. There's an on-off button here. I just forgot about it. There is. This is what I show my subscribers every day. The E-minis daily and the 120-minute chart. The 120-minute chart has gone into leg D. That's really important in my work. It says you've got to be a little bit careful. It has also made the U pattern to try to retest the 1876.75 level. What's the high today? 1 point off that. We haven't got there yet. It's in leg D, starting to struggle a little bit, but the stochastics at 89%. MACD is good. In the daily chart, the stochastic is very poor at 44%, and the MACD is trying to turn up. It might by the end of the day, but it hasn't crossed even close to crossing positive, the green line over the red line yet. And that resistance is very strong. What I said to my subscribers, a break over 1876 that holds would be very positive. So we'll be watching that. Now, a couple of things that I want you to do. See, I've discussed my webinar. You can go to the front page of TFNN, check it out. I keep saying webinar because this is not a webinar. This is a live, one-to-one. I like live for one special reason. You can see, I can see in the eyes of the attendees whether they've got it or they haven't, whether I need to spend another minute or 2 or 3 or ask a particular person a question to see whether they really do have it or not. So I'm going to go straight to our callers just to say the Dow's up 99, was up 130 something at 16,422, S&P's up 12 at 1869, and the comp index is up 43 at 4198. And we've got our first caller, Ari in Arcadia. Ari, how are you?
Morning, Basil.
How are you doing?
I have this stock shorted, and I want to talk about the monthly chart of it.
Can I just ask one quick question here, and that is to say, this is still the longer-term short that you've had for quite some time, or is this a brand-new short?
No, it's a new short. The longer term I cashed out.
Yes, okay, I thought so. So this is a new short, and you just did that when?
Pretty much at the top of 27.
Oh, okay, that's great. As long as I know that, then I can talk about it in a slightly, whoa, good time at peak. Did you call that a peak D with a phantom peak or not?
On the daily, I called it the D, and on the weekly, I called it the D.
Okay, so there are a bunch of things about it that I can talk about. Let's just do this. Let's just talk about this in terms of the short. First of all, that was a D in the weekly chart that I've got right here. And it made a B minus failure initially when it went up back in, I think it was August, September of last year, plunged quite sharply from the 29 area down to 19, just under 19, and at just on 1923, week of the 6th of December, it went peak A, B, C, D. Now, the simplicity of the Chapman Wave methodology is, in its concept, is to get you to 4 peaks, and then you've got to be careful. Sometimes it's going to fail like it did at peak B minus. But why? Because it was way under the previous, what I call the Grand Canyon cliffs. It just couldn't surmount that level. Trying to hold above the 200-period moving average failed. And the last time it just went for 1 week above the 200-period moving average of 26.19. And then plop, it came down under the 9 EMA. So now this is a very important thing because it's telling us about silver, but it's telling us really about the metals, gold and silver. And what it's saying is that that monthly chart has got the potential to make an H pattern that is already starting to look like it can go to an M pattern. And what we're really looking here is that if at any point the candle that was made with this little wick from last week, if silver wheaten SLW trading at 22.96 down 20 cents, if it takes out 22.78, there's a really, this week, that's, I would say intra-week, but I'm actually going to add to that. I would prefer to see it on a closing basis, on a weekly closing basis. But intra-week says be careful because it could very easily test the 22.27 low. That's number one. Now, all I'm going to say to you is I think you're in a good position. It's really struggling. And it's one of the silver stocks that in essence has held really well because it hasn't even come close to the low of 1775. Well, 2 points I suppose you could call close, but on the chart formation, it constantly looks to have a decent rally, and then it'll make a lower low. So it is making lower lows and lower highs, but look at the rectangle formation that's formed. Now, I want to bring that up in terms of the monthly chart because it relates to the weekly, and then the weekly will obviously relate to the daily. The daily will be the lead in changing any pattern here, but the monthly is the one that we're going to monitor very closely. By the end of the day, that'll be a conclusion of the month, and then the way April starts, the first week of April starts, tomorrow going into Friday is going to be important. I would say, Ari, that 23.62, yes, to 24.04, I would not be surprised if in the next 3 to 5 sessions, as long as the open of Friday, which was at 22.79, that's a little too narrow. I'd have to say I'm going to go to the bottom, 22.47. That's too far. As long as 22.50 to 22.45 holds on any pullback in the next 2 days, and then we take out the high of 23.45 by Thursday or Friday, that would say to me that you can expect a bounce, and that bounce could go up to the 23.75 to 24, maybe even 24.25 area. I don't know yet if it's going to go much more than that. My thinking here is that in the context of the tide going out in the monthly chart of SLW, Silver Wheaton Core, I'm suspecting that that would be the maximum that you get to the upside. So I like your position, and I'm going to suggest 2 things. One is that at 23.90 to 24.20, give me a call, because that might be an opportunity to add a quick short, or I'm going to say it's holding really well. Be careful, it could bounce more, but that's the area. I think you got a great entry. Congratulations, Ari.
Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour. I'm just quickly doing these charts here, updating. Okay. Had a couple of questions. I had Ben online, Ben from Tallahassee, Florida. Ben, if you can call back, I'd appreciate it. I would like to talk about that. He wants to talk about the SDOW, which is 300% short the Dow, which we had as a position. We still have a short position on the market, but we had that and it was taken out. And I didn't really want to have it taken out. I was going to expand the stop quite a bit, and I thought, I don't know where to put the low. I don't my subscribers take an unnecessary risk. I just don't like that. I like to know precisely that it's just a tiny percentage that we're risking, because we already, we have short position, we have long positions. I didn't want to get too carried away. So the low on the SDOW, it was at 29. It opened 29.32. It went down to 28.89. I didn't want to be there all that long. So we're out. It's bouncing back a bit now. And I have to tell you that the patterns I'm looking at, I'm going to talk about them right now. The patterns I'm looking at here, because of this rotational correction, I think it's really important. I had a couple of questions in the den. They are all pertinent. I'd like to get to them. So Ben, what I'm going to suggest is, I don't know if you got out of your, if you're in the SDOW, if you got out of it, took the smallish loss, but I would like to be holding a short position, which so far we are doing. I shouldn't say so far. We have a couple, and because of that, my inclination is to say that in the context of the market as it stands right now, I think I need to go through the market to explain to you what I'm looking at. Let me just double check here. Yep, thank goodness. Okay. So here, this is what I'm looking at. When I go to, for instance, what I'm trading here is off the 2-minute and 5-minute chart. Well, I don't have all that much time. I'm real busy. I'm doing my market lead. I'm doing all sorts of things. So what I see. I love to grab the peak Ds if they're possible and they clear in the short-term trades. And look, the E-mini went exactly to the 1866.75 level. I just can't check right now where I started. I had a number of positions. But that was good because it gave me the sense that in the rectangle formation, I could trade the bottom and trade the top, which was a good thing to do. And then there was a period where I took profits because my show was about to start. And, to do two things at once, every once in a while I do it. I find that I get so carried away with the show, I forget I've got a position. That's not the way to do it. So we're out. It went to the 200-period moving average in the 2-minute chart. Now, I wanted to explain that because the technique's the same. It doesn't matter what you're trading. You've got to have the technique, and it's got to be applicable. It's got to be robust, and it's got to be applicable. So let me just show you what I'm looking at. I was waiting for a chance that the Dow could be matching the breakdown from January the 21st, where it went to a peak B minus, made an H pattern, lowercase h pattern. Oh, I forgot to get my CD. And then plunged below the left side low of 16,256. Well, it did that once. It did that twice. Went to a B from the beak formation of that Chapman wave stalk leg formation at 16,046. Then it went on Friday, last week to 16,466 on the 26th. Each one of them is plunging afterwards. And now it's got leg D and it's doing exactly the same thing. And it's saying that there is two things. There's short covering. There's renewed buying. That's the reason why the market is actually holding the 9-period moving average of 16,315. And there is selling going on. Even the IBB, which tried to bounce today, has in fact, let me just check what it's doing right now. Yeah, it's at a tiny little bounce. Well, 5-point bounce is good. We are major short this from way up at the top. But we also bought a long position just for the bounce today. And at this point, because it's done what we wanted, the stop is a very small gain. I like that. I like that. That means I'm focusing on what I think is working. And what I don't think is working is that the sideways action in the Dow, while it's gone to leg D, I don't know if this is fun buying towards the end of the month and going into today, the end of the month, or whether, because look at the S&P, it's still fading. It hasn't taken out the 1883's high, double top high, and the Dow is not taking out the 16,505 high from that peak F top back in, I think it was March the 7th, but it hasn't even come close to the 16,588 level. So now this is what I want you to do. While we've got a moment, I'm going to go. We've got a break coming up. I will get that CD ready because I want to explain to you what I'm going to be doing in my Master Trader Chapman Wave Level 2 on Saturday, and I'll be back soon.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. This is the Tiger Technicians Hour. And let me just do one thing here. Stretch over to the other computer. There we go. Sorry about that. And 4. All right. So what I want you to do is this. XOM is ExxonMobil, trading at 97.64, down just 6 cents, but it did hit a high today of 98.85. So that's over 1.25 points down from the high. It's at the lows today. I've got this as an E/B. Why do I have an alternate count? Well, there are two things that happen. One is there's a pattern that I look at, which is this cup formation. And that cup formation is really important. In my CD, Introducing the Chapman Methodology, I talk about the cup formation. I talk about the falling axe that I spoke about in the E-minis, that declining wedge formation. But the cup pattern, which essentially is that it looks like an uppercase U rather than the lowercase u. I'll just go to that right here, chapter 15. And what this really says is that within this context, there are a number of things that you can look at, but I like to look at it that way when it's a large cup going. This particular one happens to be the low from the 1990s in gold all the way down to the low in 2000. I think it was December of 2000. The XAU, I think, was at 44 or something. I remember I got a buy signal. And then you can have the inside wedge, the left side, right side, price time match. But I have another technique that I talk about, which is the cup and ladle breakout pattern. And that cup and ladle breaker, when I looked at Exxon last night, I was a little surprised. I did not see the last 2 days of that big spike. So I was surprised. And what this is if this is not an E but a B, and that would occur if the stochastic was probably in the 78% area. So I have to consider that, yeah, it could be pulling back, but I don't have a sign yet because the MACD is still good. Let me just go to the 120-minute chart. I don't have a sign yet that says this is a good time to be shorting Exxon. It might be by the end of the day, but this time it's got a, except for the 120-minute chart, which made a peak D and is pulling back, but it has supported 97.13 to 96.86, somewhere around there. So while I'm looking at this, I'm saying, okay, so that's just one. Because the question also was the XLE. Would I look at that? So in terms of Exxon, yeah, if you are short, all I would say is I would not, 1 penny above today's high of 98.85, I'd be out. Actually, I wouldn't be out there. I'd be out based on the 120-minute chart, halfway into that 98.11, just 50 cents higher or so, and I'd start looking at this and saying, uh-oh, don't be short yet because it's still got strength. Now let's look at something else. Look at the XLE, which reflected Exxon's big push-up. It too has got the same pattern, except it's gone above the previous highs. Not only has it gone above the previous highs, it's gone above all the previous highs for quite some time. If I pull, that's the daily chart. If I go to the weekly chart, I say, quite some time? What are you talking about? That is an all-time high. And if it's an all-time high, it replicates very much the pattern that you looked at in the S&P weekly chart. Look at this, SPX.X. Look at that. Oh, I've spent so much time on this chart. No matter how I count it, it's saying that in a worst scenario, there should still be a high, above above the 1737.92 low of the week of February the 7th this year. If it breaks under that, that's very negative. But at this rate, I have to consider that it probably won't break that. That the up channel support right there on a worst case basis over the coming weeks is in the 1780s. And if I didn't want to do this because it looks a little messy, but I'll do it now because we're talking about it. But if I wanted to include, hey, if I wanted to include, why is that doing that? Let me just get out of this. Okay. If I wanted to include the Chapman Wave inside track, then the S&P has tremendous support in the 1810 area because that's that green line that it's held every time. It could break under it, but it'll probably close the week over that if it's going to get there at all. So far, that's the weekly chart. Now let's go to back to Exxon, because that was the question. And Exxon itself, the weekly chart, has not crossed positive in the MACD, only in 2 hours into the first trading day of the week, but it is holding way above 95.76, the 9-period exponential moving average, and there are a couple of little trend lines below it that says, hey, it's got support, but the stochastic is really not good. It's only at 48, 49%. That says that if there is a pullback in this particular formation that we're looking at right here, if that is not a B, we will know by Wednesday. By Wednesday between 1 o'clock and 3 o'clock, if Exxon is trading into this bar of 96.90 or lower. If it is, be careful. Then the XLE. Now, you can't put everything onto one stock. You've got COP. You've got, that's an energy stock. I haven't, oh, my God. This is disappointing. I have this. Oh, there it is. The notated on the daily. Okay, on the monthly. I'm sorry. That's good. And the weekly chart, oh, it's looking a little bit like, oh, it did make a peak G, pulls back very sharply from the 74 area and comes down to 62.74 the week of the 7th of February. And now it's got a peak, a leg B, making a peak A right there. And now it's a leg B. It's a little high to consider, and it's a little, the curve is not, what do you call that? It's not arching. In fact, it's cupping. So it's not doing this very much. I can draw that in. But look, the pattern itself is much more favorable towards looking at it as a cup formation. So these formations are fighting right now. And all I can say is that ConocoPhillips trading at 70.22, only down 13 cents, is going to be very important. If together with Exxon, it's able to break, oh, it has closed above that, 70.92, 70.35. No, it hasn't. If it's able to close above 71.50 on a weekly basis, that's going to be very important because it's going to go into that ugly candle of the week of the 6th of December. So all I'm saying is that I don't have a signal yet on the XLE. There's still internal strength. I don't want to fight a trend. And at this particular point, COP, let me just do this quickly for you. Always, in the Chapman wave, look for the lowest, most obvious left side low bar and then merely count each successively high peak. 65 to 64.95. That's A. That's B. Does it restart? Yep. No, it doesn't. That's a C. That's a C. That's a D. And now that's an E. This is an A. This is a B. A, B. Yeah, so far I have to call it leg C to the upside. C, oh, it could have been a D. It could have been a D. Oh, I'm putting it as I'm keeping it as a conservative. No. I have to do everything correctly. I can't rush. Sorry, folks, I was just about to rush through this. I cannot rush because that's just not fair to you. So that's A. Inside buy signal. That's B. There you go. I'm pleased I took the time to do this because doing things very quickly can get you into trouble. Okay. Now this is a C. And that's a D and that's an E. All right. So, ConocoPhillips says I'm getting a little bit over extended here, but don't short me yet because I'm at 90% in the stochastic and the MACD is still very good. So I don't have a signal other than to say visually it's vertical, and you always look at a vertical chart and say, oh, I could pull back. But pullback says that's different to at 70.18 holding 69.50. 68.85 is the 9-period exponential moving average support. I suspect if this is going higher, in the next 2 days, it won't break 69.60. It's going to pull back a little bit and then make another nominal new high. So that's that. So I've done those, and now what I want to do is VMware was another question in the den, and the VMware had a fantastic move up to a peak D back on March the, very sensitive, this what's going on, March the 21st at 111.45, pulls back to the low of Thursday, 104.30, and now it's at a leg A, which seems to be a gray A, which seems to be fading a little bit, and the weekly chart is still very strong. Stochastics at 88%, MACD is good. I would not be surprised if it's able to take out, if VMware is able to take out today's high of 109.93, that it does retest the all-time, not the all-time high, the previous high of the 21st of March, at 111.45 and make a new recovery high for a D in the weekly chart, and that'll still be C in the monthly. This looks quite good. There are some stocks that are actually looking quite good, and that's what I wanted to emphasize by going through this little ritual now. That was VMware. Quick question. And broken out. Okay. And, I had a question here earlier on. Would I look at, I haven't got it. I'm going to do it right now. So I'm just going to get out of this particular chart right here, close the workspace, yes to all. And I want to go right here. I want to discuss this for a moment. I haven't heard anyone really discuss it in the context that I have visually here. So let me take a moment to do that. And then we're going to, we've got a caller online. I don't want to have callers waiting online, and then they drop off like Ben did. We're going to go, I'm going to show this chart in a moment. I'll keep it up here. It's right there, and it is the triple yield chart, 30-year Treasury bond. This is the 30-year, this is the 10-year note yield, and this is the 5-year note yield, which went to a cup formation, and the others have an arch formation. This is going to be really interesting. Garo in Newport Beach. Hi, Garo. How are you?
Very good, thank you. How about you, Basil?
I'm well, thank you.
Very good. I want to concentrate on ICE from here on. I needed your opinion regarding this chart. The yearly is not, the weekly is not very firm yet.
Right.
is not very firm yet. And what is your idea regarding this chart?
I had this. I know for sure that I had this very well notated before, but I did lose power the other night, and that just knocked a bunch of things out. So I've lost it. But I know that I had a big conversation with a trade station, and they are working. In fact, the new iteration that they've got has only me. I'm the only one out of the entire trade station, they said, who typed on the chart, and I couldn't type. It looked like there was a piece of glass on top of it because I could see the letters, but they wouldn't go onto the chart itself. So they spent some time, they figured it out, and there are a bunch of things that they're figuring out. So I've lost ICE right now, but I'm just, give me 1 second. A, B, C, D, A, B, C, D. So it had two buy modes going to a peak D in the monthly chart, and that says be a little bit careful in the monthly chart because it's starting to pull back. MACD's still good, but it has turned down, and the stochastic's at 84%. It too is turning down. That makes me a little cautious on the monthly. The weekly, as you said, and ICE, of course, is the Intercontinental Exchange Group, and I need to take 1 second. Okay, here we go. A, B, C, D. You know what? That looks like, yep, that's going to be an E and an F. E, F, and then a new A, B, oops, B, not a V, B, C. I need to check to see, oops, too sensitive. 218.13, there you go. I knew that was a potential peak. C, D, and E. So a weekly chart has a peak E, and it's got the pattern that I call the A, like the Eiffel Tower, goes straight up and straight down. I got to be a little bit careful there in analyzing that because it's under the 9 EMA. The MACD is negative. Stochastic is showing a little bit of strength today, but it's really flat strength at this point at 12% in the stochastic. Now let's go. Do you have any position at all?
I had a position Thursday. Friday I bought it and at the close, and today I sold it. I made very good money. I made about $4 on the up. But still I'm not very sure about it because the weekly chart is not giving me a buy signal. The 5-day moving average is far away from the 50-day, and the candle is below 5-day.
Correct. Okay.
Yeah.
So here's my assessment. I think that there could be a little bit of a balance, which is kind of what you were trying to play, and it hit the 9-period moving average at 200.94. The high today was 201.11. It went just fractionally over it, and now it's pulled back. I think as a short-term play, based on the 120-minute chart, a lot depends on the general market right now. The stocks that have been hit the hardest are actually, many of them are struggling to come back. I'm surprised at the lack of strength. And basically what it's saying to me is that stocks that have been in favor for so long, the fund managers are now saying, we just got back in the last couple of weeks and it was a terrible mistake to do it. We're not doing that. We are now getting out of these stocks. That's my thinking. So only as a bounce. And all I would say to you is that in the methodology that you use, I suspect that if ICE can spike to 200.50, then you can start a small position because, hold on a second, we've got a break coming up. I'll talk a little bit more if you can hold on. Folks, we're talking about Intercontinental Exchange Group. ICE is a symbol. ICE is trading at 199.40 up 320. I'll be back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Garo in Newport Beach, California. We're looking at ice. We are sick and tired of seeing ice. In fact, it's raining again today. We're looking for warm weather, but ice is the symbol for Intercontinental Exchange Group, trading at $199.50, up $3.33. Up at 1.70%. Now, Garo, I'm looking at the 120-minute chart, and I'm seeing kind of what you're seeing, that there should be a bounce. You got a very nice bounce already. You got one or two things to do. I'm only calling it a bounce because as of this moment, I think that the best case is a 203 to 205 bounce. And then the weekly chart says probably going to dip and make an H pattern to come back down again. So, yes. But that's nice. As you know, you like those 3-4 points because you buy enough shares to be able to benefit from that. So I'm going to make the suggestion here. You're out. You've got your trade. I don't really like it, certainly for you, because you don't like to just keep trading and trading. I would normally have said, you know what, you could in fact add a small position now and another position at 198.50 with a 1 point stop on the on the whole. So that's 197. Say 197.20 is the stop on the whole thing. I would prefer that you buy strength, which is kind of what you like to do. So I'm going to make the suggestion: hold off for now. I'd even say, market-wise, we might have got the best out of the market. There could be a retest of the highs. We'll see. But it is today really is a fun day that a lot of fund managers are putting money to work, and probably you get something tomorrow. So it's got that going for it. So it's a short-term trade. And my recommendation is probably have a little patience, wait for the 198.70 to 198.30 area. If the market is holding up, if the general market, the Dow's up 104, the S&P is up 1264, the comp index is up 47, you've got gold down 5, not such a great sign. It's also not such a great market sign. Silver's up a penny. You've got crude oil down 32 cents at 101.35, and bonds are down 0.5 point. Dollars down a little bit. Euros up a tad. I'm suspecting that this is very select buying that I'm looking at right now, and as a result, I probably would say to you, have a little patience, because if by Tuesday afternoon or Wednesday morning we start to see selling return to the market, I suspect that ICE will be one of the players to the downside. So I think you got the best out of it for a trade. My thinking here is, let's see how that 198 level holds. In fact, I'm going to say to you, see how 198 holds. If it doesn't hold, I would wait a day or even a day or two before thinking about it as a bounce. Believe me, if this thing, it might take 3 to 5 days where it has to retest the 197 200 period moving average, maybe go down to the low of Friday, 195.34, maybe test it, and then make that 200 period moving average either a resistance or support. My visuals right now say that between 202 and 193, that's its trading range for about the next 2 weeks. So we'll be watching it. So I would buy it on a pullback, but not if the general market gives it up. If the S&P at 3 o'clock today is only up 6.5 points instead of 12.5 points, and the Dow is only up 50 points instead of 103, I'm going to say to you, don't do anything, step aside. But if everything's holding quite well, and there is a little bit of a pullback, and ICE then holds well, that's a quick trade that you can maybe make again. But you've got a very nice profit out of a very quick trade that you held overnight. I know you don't always hold overnight, so I'm suspecting, don't push your luck, because you've done it once. I see no reason to overtrade. Okay?
Absolutely.
Okay, thank you for calling, Darryl. I have to go, folks, but I'll be right back straight after this for Larry's show. Don't forget, Mike, go to the front page of TFNN, check out my Master Trader series at Chapman Wave Level 2, and I'll be back to discuss it in detail when I get back. Hold tight.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.